Hello, Mark Sturdy here with another summary of our work this week, 7 days ahead, looking at major liquid world markets. And you'll see from our summary page that we remain bears of the dollar against the euro and in all time frames. And also we are now bulls, unambiguous bulls, nervous but unambiguous, of the S&P 500. I don't see how you can not be bullish of that market. Let's start with the dollar euro as we usually do. The long-term rationale for being bear dollar against the euro is the breakup through this resistance here, this diagonal resistance, the breakup through 112.75, the prior high, beginning and confirming this bull trend here, and the breakup through the downtrend resistance from 2009 or 2008-9, this diagonal here. That is the wider context. Shorter term, there's no question but the dollar's repeatedly tried to go stronger here, here and here, down through the 114.73 support, or band of support from the prior high, and has failed. The strengthening dollar since the end of January, that trend, well established, has now, it seems to me to be in the very short term broken, and the market now has good support beneath from these prior highs around 116.50 and is set to trend higher. That's the dollar euro. There's lack of clarity elsewhere. In particular, I should mention the dollar yen, which we have been bearish of the yen, bullish of the dollar for a long time on the basis of this very long-term chart here, the breakup through 147.63 from many years ago, and the catalyst for that breakup being this continuation triangle, which is now completed, that suggests the market over 170, more to go. But short term, we've pulled back from our clear, unambiguous bearishness of the yen because of the failure to get above 158.08. So for the moment, short term, great uncertainties stand back. The dollar euro is dull, awaiting clarification on this consolidation around here. The wide trading range, of course, remains. Stocks, though, we have now been massively impressed by stocks across the board, their resilience and their desire to go better. The best of these is the S&P 500. Here's the long-term chart, an unambiguous and well-constructed, bouncing off prior highs, bull trend. The pullback recently to the prior high support found, tested and bounced with great alacrity, and so much so that it's through the prior high 170.96. That we cannot ignore the desire to go better implied by that speedy bounce over the last 3 weeks. Even if the market were to come off, it seems to me that the bull energy implicit in this is remarkable. 70.96 is obviously a pivot. We've closed above it once on the week and obviously on the day. We would like to have another close for certainty. For cautious bulls, we'll want to have another close above there. Less cautious bulls will already see in that weekly close above it a massive bull energy and be long. Very impressive, as we say. Others are less impressive. Notwithstanding the fact that the S&P, the Euro Stoxx 50, is massively well set up in this long-term chart, having traded above its 55.24 level from many years ago and bounced off that level indeed, which is a very good, solid setup, long and medium term. Short term, it's less impressive. I've been unable to get back to its prior high like the S&P, and is somewhat short of it. There is a bull gap there is bull energy, but we would not see that as a leading bull market, nor the FTSE 100. Similarly, although very well set up long term, the market's still well short of its prior highs and therefore less attractive. The Nikkei is the nearest contender to the S&P. It is incredibly well set up long term, 39,600 back in the 1980s. The catalyst for the breakout of that 1980 level, this triangle, sending it up to current levels. The pullback to the recent prior high, as in the other markets, bounced with alacrity. It actually closed right on its 59,500 all-time high and is traded around it just slightly It was driven with greater clarity, you might say, with the completion of this head and shoulders reversal from the prior high, a rather better structure than any other market had. It has reached its minimum target, but we would like to see a close above that 59,500 before buying the Nikkei again. Bonds are less clear. Obviously, there's a trading range in the long-term charts of the US, and there is a lack of clarity about this possible head and shoulders top is now being, it seems to me to have lost clarity and integrity by the time the market has spent pushing up through the neckline. This could yet complete with this being a bear rising wedge on a breakdown through this diagonal. Wait and see if that happens. That would reignite higher yields, lower prices argument, which is very much better made in the Bund. Longer term, it's broken up through these resistances from prior lows. But there is a degree of uncertainty in sideways price action that has shall put some anxiety into the higher yield argument chart-wise. We'd like to see this resolved. Price-wise, we want to see a little more clarity in this sideways consolidation beneath 125.90, which basically means a break either of that or here. A break beneath 24.25 would solidify the long and the short term and give greater coherence to a higher yield, lower price argument chart-wise. The gilt, well, we have been bearish on yields, lower prices, higher yields, due to this long-term monthly continuation futures chart triangle, a long sideways consolidation beneath that lower diagonal has now been broken by a break beneath 89.23. There's less clarity in the yield chart than there is in the price chart. We want to see a break above this diagonal, which we haven't had yet. Price-wise, the pullback to 89.79 is interesting. Double failure encourages the lower price, higher yield argument in chart-wise, but really we need some clarity here that we haven't got. And similarly, in the yield chart, the yields have broken above this diagonal from these prior highs, and we want to see a little more clarity before we get involved, even though we're long-term bearish of yields, higher yields, lower prices in the gilt. Oil, trading range, consolidation, some interest in the market if you can get beneath 81.64 in the June 26 futures. Till then, it's a sideways price action, as it has been since the beginning of March. Gold, obviously at the high of this remarkable bull run, repeatedly bouncing off 43.98, this prior high. There is a great lack of clarity about this price action here above 44.88 in the June contract. Stand back. Thanks very much.